No matter your age, your plan for retirement can start today. From the News Channel 5 Network, this is the Retirement Report.
Good morning. Welcome to the Retirement Report. I'm Hank Parrott, your host. We're going to be talking again about investing this week. One of the things that I've been, in fact, over the last few weeks, talking about is sharing with you the myths of investing, some of the things that don't work, some of the things that we believe to be true over time, and then realize upon closer inspection that they are not really true, and this can set you up for potential problems, additional volatility, and risk in your portfolios. So we're going to share, over the last few weeks I've been sharing, in fact, about what those myths are. Things like stock picking, market timing, track record investing, and costs. And what we covered in those, and in fact, were how these things can, even though widely accepted to be principles to follow in investing, find that in fact they can again create additional problems for you when it comes to investing. So we're going to talk about that. I'm going to pick up on it, finish that series out this week. In addition, I'm going to throw in some additional things from Vanguard and Vanguard advisors with regard to this. So one of them being when it comes to investing in volatile markets, some things that you'll want to take into consideration, such as we talk about staying disciplined. Remember, you're a long-term investor. This is the time when you want to remember your plan, and of course it's important to have a plan, right? And that you want to stick to that plan at these times. However, that doesn't mean that you don't do anything at all. Okay, this is an excellent time to review your plan. And there are some things that Vanguard put out that I thought were really good about this, and this one being asset allocation. Consider rebalancing. Now, rebalancing should be something you're doing all the time, all right, through your portfolio. So if you're a do-it-yourselfer, this is something you need to learn about, and if you're with your advisors, hopefully that you have an advisor that is assisting you with that part. I know in my office, we do the rebalancing quarterly with all my clients' portfolios. This is important. It will add additional return to you over time, as well as reduce your volatility and risk. Just think of it when it comes to rebalancing. It's, if you think of stocks and bonds as an example, it's an easy example. In fact, stocks typically outperform bonds. You can have periods, right, like we've had this year so far, where the stocks can underperform. They're down about 10%, the stock market year to date, and bonds would then, of course, be higher. So what we would do, right, what's one of the principles of investing in the stock market? It is that you want to buy low and sell high, right? So you want to capture these returns. That's one of the principles. Now, when we're staying the course over time, what that looks like in rebalancing, stocks are low, so we would sell off rather some bonds, right, which are high now. We make a profit, and we're going to take some of that and buy these stocks that are low, so when they go up, we're going to increase our potential return. So rebalancing, let's say you start with a 50-50 portfolio, and over time, in this year, let's say they've underperformed by 10%, right? So now they've dropped 10%. That's thrown that 50-50 portfolio out of whack. Now stocks represent a lesser amount. That'll reduce our return, increase risk. So what we want to do is buy some more of those stocks, bring it back to 50-50, and since we're buying them low, we have a bigger potential return over time as well. So that's one example of how, and you're capturing some monies where you've gained at the same time. You're capturing some profits. So rebalancing, very important to your portfolio. Good time to be looking at that, in particular in light of what's going on in the market. Reevaluate your risk tolerances. Ever there was a time, I know this is that time when you see the market drop over a 30-day period, basically the fastest drop over that short a period that we've ever seen in the stock market. It was like a 34% drop from February 19 to March 23rd when it bottomed out. So what we want to look at is how can we in fact take advantage of these times. When you've got this kind of volatility, you look at yourself and say, am I still comfortable with this kind of risk, or do I want to do something? Now, properly, let's say you had a 50-50 portfolio. Well, hopefully, when a market dropped 34%, your loss at that time, or your, how much you would have dropped, would have been about half that, as an example. And when the market rebounded, you would have, gone up, not quite as fast, but you would have still got those gains. So this is a time, if you're more heavily, if you're 100% equities or 85% equities or whatever it might be, this is the time. Were you comfortable with that? Were you able to stay, have the peace of mind, stay disciplined, not worry, we're going to get through this kind of thing? If not, this is a good time to reassess that and maybe to look at your asset allocation model a little differently. Active versus passive investing. This is one of those areas I'm going to get into more today and talk about the pros and cons of each. High cost versus low cost holdings, and then concentrated equity positions. In other words, just a time to look at your overall investment plan. Tax efficiency, refund. This is one of those, when you're looking at tax efficiency, the portfolios that I utilize, we build in tax efficiency in the way that we structure these. So depending on the types of assets you have, if you have, let's say, company plans like a 401k, 403b, TSP, thrift savings plan, or IRAs, SEP IRAs, if you have Roth IRAs, if you have Roth 401k or Roth TSP as well, could fall into these categories. How you're going to deal with those is going to be different, and how you invest is also going to be different. There are certain ways that you balance your portfolio out that has some tax efficiency while still maintaining that risk tolerance, or the management, if you will, of risk in your market risk, in particular in your portfolio. So tax efficiency, very important when it comes to investing. The merits of a Roth conversion, great time. I'm doing a lot of Roth conversion analysis for new clients coming in. And this is an area where we look at the long term. How is this going to affect me short term and long term, in particular with all the spending that's going on, right, with these stimulus plans, with these bailouts, all the things that we're seeing. What does that mean long term with regard to taxes? Is it likely that taxes will go up, at least for certain tax brackets, almost certainly in the future, to help pay this down again? And that's something that you want to be thinking of when it comes to your own personal finances. Might a Roth, turning some of these taxable accounts into tax-free accounts, if in the future that could be a bigger benefit to you. Retirement strategies is another. Of course, this is where your strategies for spending in retirement, right? When you're starting to take the money out, which accounts do you take money from? And we get back into the same thing, just as with investing, the types of accounts you have, much the same when it comes to taking money out in retirement. If you've got Roth IRAs and traditional IRAs and company plans, as well as maybe just some non-qualified brokerage account, that's important, right, in terms of how you're going to take income in retirement, balancing those out to minimize taxes and maximize your income over time, as well as, of course, making sure that your assets are going to last throughout your retirement lifetime. Discuss so the withdrawal order, whether is the big part of that. Spending rates, and let's see, client liquidity buffer. This is another one of those. When it comes to liquidity, making sure that you've got sufficient liquidity in your portfolio. In other words, enough to provide for the income, stable income, not have to worry about the market downturns, that you've got the resources that you need readily available to you. That's, I talk about as well, an operating fund, an emergency fund, a short-term fund. All of these need to stay particularly liquid and safe through the process. And then lastly, we've had two major pieces of legislation in the past 6 months. First one being the Secure Act. Understanding the effect that would have on your planning is so important. We've talked about it here on a number of shows, and we'll be bringing it up again. But this is a good time for you to review and understand the impact of that, in particular when it comes to your estate planning, legacy, and of course retirement. And then of course the CARES Act, the most recent legislation, and how that might impact you, starting with required minimum distributions this year, not having to take them, what that might look like, and there's some other pieces that go with that as well. All right, so much to cover, right? We're going to get into the investment part though when we come back. But first, a break. Join me here. We'll be right back on the Retirement Report.
This is a Storm 5 weather update. For weather on the go, download the Storm Shield app.
I'm News Channel 5 meteorologist Nikki D. Ray. Here's a live look at the Power 5 radars. You'll notice quite calm conditions. We're looking to stay on the clear side as we head throughout the day. But goodness gracious, is it going to be hot? These temperatures that you're looking at across the southeast, yeah, we're not seeing face value for those. So closer to home, you can actually tell how it feels a few degrees warmer than what it actually is. Winds today will be staying out of our northeast around 5 to 10 miles per hour, keeping some drier air aloft in place, and that's keeping those thunderstorms at bay. 93 degrees for our afternoon, feeling closer to the triple digits. It is going to be hot and definitely humid. But hey, it is Middle Tennessee and Southern Kentucky.